Happy Wednesday to you. We welcome you to Growth and Value Stocks. My name is James Boyd. In the chat, we have the Ben Watson. Say hello, Ben Watson. Now, just real quick, we have Will with us, Heather, Olga, George, Robert, uh, Jay Richardson, GT, Josh Pink, Trader Joe, and many others. Welcome to all. Riceberg, hello to you. Now, just real quick, let's go ahead and hop right in. Kind of some questions that have actually come up in the chat. Let's answer those as quickly as possible and talk about some examples. Now, again, we're talking about growth and value stocks. Interestingly enough, if you look at maybe a product that is trying to track growth, we saw growth this morning actually go up to a short-term high. Okay, we saw the mega caps. We also saw the Magnificent Seven, if you will, those bigger names. Those also went to a brand new high. So kind of interesting in some cases, some growth going up. Why those semiconductors? JP has asked that we ask the short sellers to stop shorting those stocks, and we'll see what we can do. Now, just real quick as we get started, Ben and myself, we would post educational content on X. There's my handle. Ben will post his in the chat. That way you can follow him as well. Now, just real quick as we get started, remember the information I talk about is done for general informational purposes only. When we talk about examples, we will look at not just technical analysis, we're going to look at the fundamental analysis as well. Also, our examples will be done on the software application of the Paper Money platform. When we talk about, or if we bring up stocks that pay dividends, understand that those companies may reduce or stop paying dividends. They could also increase the dividends, right? More of the story is it's not infinite in time. It's based upon the business condition, and it can change. Now, also remember when we talk about examples, all investing involves risk. And with that said, I want to kind of make mention of just two things real quick. So first off, if you go to this page right here, let's go to this. So this is our page. We're broadcasting via YouTube. If you actually go to YouTube, type in Trader Talks Schwab Coaching Webcast. This is our channel right on YouTube. So if you're watching live recording as well, make sure that you subscribe right in the middle of the page. Second, this is the playlist for this class. Feel free to bookmark this. Think of this as your favorite show, if you will, and you're going to watch the episodes. Bookmark that. The other thing I want to make mention of is Ben, Kevin Horner, and Barbara will be at an in-person event this weekend. This page that I'm sending you is the live events page for coaching. You're going to see that if we scroll down to that first one, this weekend, technical analysis and option strategies. That is a 2-day event, okay? You do not have to live in that area. You might be traveling into that area and so on. If you want to learn more about that, check that out. Coming up, where else are we going to be? Well, Dallas, the next one, right in August 1st. Crazy to think we're in August, football season. No, the real football. I mean, well, for us Americans. And also, just real quick, that was pretty crazy yesterday with Spain. Orlando, August 7th and 8th. Geez, going like back and forth, Ben. And you got New York, okay, coming up. So East Coast, Scottsdale, Arizona, DC, okay, Miami, okay, Chicago, back in Chicago for advanced options, Honolulu, aloha to you, and you're going to see that also Anaheim. So these are some other ones that are coming up throughout the year, and obviously as we get near the end, we'll actually go to 2027. So we'll just want to make sure you're aware of that. Make sure you click on that to learn more information about that. Now let's go ahead and hop right in. Man, tale of two tapes, right? You got the S&P 500 holding a trend line still. We're talking about the equal weighted S&P 500, okay? If you look at the SPX, which is going to be top-heavy technology, okay, among other things, you see that actually in the shorter term, I think if we have to bring a magnifying glass in, it's close. Maybe an intraday high if you look over the last 20 days or so, okay? Again, top-heavy technology. Decent move, okay? Over the last, I mean, it's not shooting to the upside, but it's holding even when the NASDAQ has been under pressure. The NASDAQ opened up higher and then sold off. But the big thing to really be watching is some of the pressure that has been and continues to be in the semiconductors. SOX, the only thing that we could say, well, two things we could say positive about the semiconductors. A, the price is above zero. Two, there is a bullish MACD divergence. That doesn't mean we've actually marked the bottom. but hopefully this selling pressure is starting to abate a little bit because those stocks, and I'm just going to bring up just a couple that were in the NASDAQ, and you go down to the bottom, SanDisk down 12%, Light down 8%, WDC under pressure, Seagate Technologies, Micron down 7%. Let's just throw in Dell. I mean, while we're at it. And if you look at Dell, what you're seeing is some of these higher growth names just getting pushed all over the place. Okay. Now, remember what we said on Monday. The growth is not just technology. Some of these stocks that went up hundreds of percent have been breaking down and are continuing to press lower to some degree. Now, Dell even got knocked around this morning, opening up a smidge higher and then going down to maybe the bottom of the range at 400. But man, the movement in these have been, well, that's why I said yesterday, is that some of these stocks can move 6, 8, 10% in the morning. Okay. This one moved $55 in an hour. Okay. Now, that doesn't mean everyone needs to play in the deep end of the swimming pool. Clearly, this has been that riptide, if you will, if you're talking about swimming and investing. Very volatile in that area. Remember, volatility is not just down, it's up as well. They went up lots, and if you go up lots, you can go down a lot. Now, when we also talk about some of these other areas like Dow Jones, Dow is not breaking to a brand new high, but at least getting above a short-term moving average, 181. How far are we off the previous high? Less than 1% off the previous high. Russell trying to carve back as well. Shorter-term moving average actually green there. Okay. Now, if you ask me, are the moves really in the indexes? Are they in the sectors? Or are they in the industry groups? What would you say? Is the moves in the index, the sectors, or the industry groups? And if we actually said, by the way, that position Paul's down 200. Okay. If we actually said, is the moves index, sector, industry groups, we would say the moves right now are in industry groups. The software, the cloud, the big seven, retail, cyclical, growth, right? Mega caps. That is where we're really seeing the moves. The moves are in the industry groups. Okay. Now, the big thing is actually when we pull this up, let's go to just real quick, the financials. You pull up the financials, the IXM, not our favorite ticker symbol, but if we use this one, okay, grinding, fine. The $ IXC, the communication grinding, okay. And if you also look at the one that we're going to keep an eye on, is really the IXE. Softer currently, but it is kind of maybe like what we would call if volatility were to occur. Now, that volatility that we saw late last week, we didn't really follow through with it. It just kind of fell down, okay? So if we said, where is the volatility in the current stock market? We would say semiconductors. Outside that, you'd probably say gold and silver, okay? But really outside that, don't see a ton of volatility, okay? Outside semis, gold and silver, okay? Now, let's take a look at a couple stocks fast fire. Now, a couple months ago, JP Morgan talked about the economy, as he always does. Jamie Dimon tends to be more of a pessimist, which makes sense because he's trying to protect the assets of the bank / firm, right? Now, it's nice to be wrong sometimes. JP Morgan actually goes up to a brand new high here today. Now, the other one is we're going to keep an eye on is Google. Google has earnings coming up, and it's sitting right there. We're going to swing back to that. Earnings in a week, okay? But that one kind of looks like, if we said pattern, maybe like a shoulder, a head, and then a shoulder. And so if you take a quick look at that, kind of maybe neckline, maybe right around 370 or so. Now, some of you say, look, around the earnings, I would never invest around earnings. It kind of depends upon how big your position size is. If you know the earnings is coming up, you might just push down the position size on purpose, okay? So we're going to come back to that in just a second. AXP. AXP has really been that stock that we've actually talked about, kind of grinding back to the upside. That earnings coming up on the 24th. Now remember, if you get a lot of stocks coming up with earnings, you might default to a different type of investment where you're not buying one individual name. Don't forget that. Okay. Now, the other one is Goldman Sachs. Kind of a little pause after a little explosion yesterday. Might get us in on that buy limit we talked about. CVX, I want to keep an eye on that, which is right at the bottom of this range. XOM, which is right there. Now, both of these kind of look like, oh, it's rejection of resistance. Well, remember, if you think oil is going to be up for longer, that resistance might not last. Okay. Now, I'll come back to, let's flag just real quick if we kind of sit. Now, I haven't made mention of one yet. Let's actually flag Exxon. Okay. Let's flag Google. And let's come back to the one we have not made mention of. And why can't everything just be like this? Apple. Okay. This push in Apple, not a bad push, by the way, from the breakout. Now, remember here, if you're long, you always want the move to go faster. I understand. But if we actually said, how many days have we closed lower than what we opened? 1 day, okay? And the rest of the closes were higher. So over 9, confirm, over 10 trading days, there was 1 day out of the 10 where we closed lower than where we opened, hence the red candle a couple days ago. All the other days we closed higher than where we opened for the day. Now, why can't Dell just do something like this? Why does it always have to, if I didn't have this one position, I would be better off. I mean, you ever realize that? Welcome to investing. It's just like when you run a business, all employees are doing good, but this one, right? There's always one, okay? Now, if we take a look at this, let's go back to this. So I don't have anything to say on Apple outside, got that position already. But I want to go back and kind of take a peek at, let's go back and just look at a couple of these stocks. And let's bring some of these up. Now, there was also some questions regarding kind of this when we evaluate the numbers, okay? And let me pull this back up. And so are there any questions first off before we dive in? Okay. Any questions? Yeah, I mean, let's go to I'm just taking a look just real quick. Okay. Now we got two different positions on Apple, but that's the least of the worries. Let's kind of just show the positions that are in the portfolio as we're seeing if there's any questions. We have Apple. These are shares, stocks. Okay. We have Apple, AXP, John Deere. We had a question on. There's Dell. Okay. God, it was profitable this morning and then it turned. I looked for some news on that. I did not see, well, the PC sales were slower. That's what I saw, but I didn't see any of the news. Coca-Cola, Love, getting a little slight push. Ryanair, the one that actually had the worser potentially fundamentals, actually got a little pop here today. United Healthcare down, and anything below is not shares. Now, the other one, if we went to the IRA, just so we can kind of see what we're in, Amazon, there's CSX, Deere, okay, there's Google, so there is a position in Google. There's Target. Oh, don't forget the Target. And then you got Welltower. So if we're, and by the way, you're also bringing up Altria, which is shares as well, to some degree. Now, if we bring up just real quick, and I'm going to look at questions, Target is also, let's kind of start here for just a second, okay? Because the margin count, I don't believe has that, but the IRA does. Now, if we're talking about trend, now if you say, James, I don't have this chart, let me send this to you, okay? And there it is right there. You can go also to style, and then we're going to go to chart type, and we know you can do a bar chart, candle chart. Let's go to this candle chart right there called Heikin-Ashi, okay? Now, Heikin-Ashi. Now, if you take a look at this, my nephew lives over there, and I don't know why, but I've been thinking about, like, I'm probably going to go to Japan. Anyway, so if we maybe learn that Japanese, okay? Overall, if we take a look at this, this is a kind of a, for some investors, a simpler way to really see higher lows. Why do we care? Well, because we want to see support, whether it's horizontal or diagonal. You'll notice at the bottom of every one of these red and green candles, this is where we got the red and green candles, red and green candles, red and green candles, and you do this over and over again, okay? the moral of the story is you get it, we're now just kind of do dot to dot to dot to dot to dot. And that dot to dot to dot tells us, do we have a horizontal or a diagonal support level? Now, if we did this and said, what do we really have? You could say in some cases there has been horizontal, sure. You could also say to some degree there's also been a diagonal line where we're touching many of those lows, okay? Underneath, if we said horizontal, probably about right there. Whoop. Probably about right there. Here. Maybe a little lower. Somewhere right in there. Okay. So you got a diagonal line, which shows us the uptrend, which is what the investor's trying to get in to see if they can actually see that movement, maybe potentially push higher. We go back to, let's say, just real quick on the fundamentals on this. Again, for a while there, Target kind of was targeting a demographic. That demographic that they were targeting, it didn't really work out for the firm. The firm, it kind of turned on them, to say the least. They turned the other direction, and it's kind of taken some time to get people to forget about agendas and just focus on selling products and services. Okay. Now, if we take a look at, let's say, what we have here, this is looking at, again, year. Now, if we look at these numbers, 14, and again, this is what I'm saying, dropped a lot in 22, flatlined in actually 23 and 24, and actually 25, it's actually been pretty soft. Go back actually to the quarterly, and you're going to see that in Q4, Q1, that's all we have. So the keyword is so far. If that stock is actually going up, clearly there's an expectation, doesn't mean it's going to happen, that actually revenue could continue. These numbers over time, they've actually been stagnant over the last, let's say, 4 years. If we're talking about yearly numbers, this last year, obviously 2025, we could actually look at quarterly and actually see what that number is. We want to actually see if they're starting to get that growth back that they had before. Not great fundamentals. Now, you got to understand something. When people buy things that are technically beaten down, maybe it's a basing pattern starting to reverse, it's the same idea with fundamentals. Maybe the fundamentals haven't been that great, but it's turning. That's the idea. That's why people buy stocks that have technically been beaten down, buy them in expectations that could go up. Same thing with the fundamentals. Now, if I go back to this chart, let's actually bring this up. Ricebird had a question on that little sheet that we talk about. What sheet? Well, if we bring this sheet up, let me kind of just show this. Now, we're just kind of doing this to kind of, that way we can kind of write. We don't have to write it down on the scratch pad. Okay. Now, this one I'm about to show, if I can slide it over. Let me just bring that over if I can. There it is. Okay. Now, someone said it's going to take, maybe I got to create this sheet. It's not really that tough. Okay. So current price, let's type it in. Trade example number 1, 139.44. Okay. Support. If we said support on this, we might say at the highest support, 130.09. Now, that stop, 127.49. That is just taking the support less 2%. So that's where we're getting that number. Okay. So support less 2% on stocks greater than $50. 3% if lower than 50. Now, when we talk about the risk in dollars, that's $11.95. What is that? It's the current price minus the stop price. Okay. We want to know, so $11 on Dell is not the same thing as $11 on Target. They're two different prices. One's higher, one's lower. So what we're really looking for is the percent. Now that percent is the dollar risk divided by the current entry price. So it's taking $11.95, dividing it into the current stock price. Now, you might be thinking, well, why didn't you buy it earlier today? We say this every class because we do all the trades in class. Now, if we could have said, man, this morning I saw that, it was at 136 and change. The percentages this morning were 6%. But if we're buying at 11 o'clock Eastern time, it's higher now. Noted, I understand. Now, we said most of the examples are probably going to be about 5-6%, maybe 7. But if we go over 8, we know it's getting a little higher off support. but the absolute max of the max is 10%. Now, if it's higher than, let's say, this 8%, the investor might say, look, I might try to do a buy limit, dollar cost average, and so on. We double check actually that ATR to kind of see where that's, how much room we're really giving it. If that ATR on the bottom is 416, the movement we're allowing is about 1195. The multiple we're looking for is at least 2 times. We're about almost 3. So, okay. Now, these are the numbers we're going to do over and over and over and over again. So that's why we kind of just write it down on a sheet of paper. Now, let's actually go back. So trade example number 1, target. Now, by the way, if we actually bring this up, okay, target. Now, that price, now let's kind of show this. Bring it up on the envelope for just a sec. How extended is it? It's not as extended as the percentage showed. It's really 3% above the 10-period moving average, which is that light blue. Notice that we were sitting right on that 10-period moving average this morning. Okay, so now, by the way, if you looked at the sectors, and underneath the sector of discretionaries, you know there's retail. If you look at retail, you would probably have seen that actually Target was one of the main ones in there that are getting a little push, among others. Now, what I'm going to do is I'm going to right-click on the chart. I'm going to go buy custom. I'm going to go with stop, okay? Now, if we did this, we want to make sure we dollar cost, position size, When we look at the amount, let's say at the most we do is $7,500. $7,500, stop, let's go back to that stop, 127.49. 127, okay, 49. Stop date GTC. So we got an entry, we got a stop. If we went back kind of said, well, is there a potential target on this? The problem with this one is it's kind of just more grinding to the upside. Go back to a 3-year weekly chart. We might not see a longer term always. However, we do see that we have a previous horizontal maybe at 142. Anything above that would be right in the vicinity of 158, 160-ish. So I'm going to change this if you don't mind. First trigger is all. I'm going to go first triggers OCO. We're going to actually add on, let's say, create duplicate order. And I'll put a target on this. And I'll put 159. So in this case, we have a stop, okay, there, and I got a target there. Now, if I just wanted to start over and just do this again, right click, buy custom with OCO bracket, let's put that right there, 159, 127.49, okay, I just restarted it, and we're right back to where we were. Now, I just got to double check on this. Capital size, or how much capital we put in the work, 7,500. It's going to give us about 53 shares of stock. Okay, target. Literally the target, not the store. And then the stop. Now, any questions? Now, if we went back to this just for a second, okay? So the one thing, and let's just kind of write this here, okay? So when we talk about, let's say something, if stop less, well, I'll say this, if risk percent less than 4%. Okay, what does that really mean? High chance of stopping out. Now, you might say, well, that's the point. Okay, so as long as you know that, okay? In other words, it's not really giving a lot of wiggle room. If risk, maybe 5 to, let's say, 6%, this is just kind of more the average. 7% getting higher off support, okay? 8%, as we just said, elevated, okay? Elevated off support. Think about buy limit order, okay? Question mark, dollar cost average, okay, etc. And then 10% is, we're going to use the little language, too late, short term, okay? Looking for pullback. All right. Now, you can do your own percentages, but you're entitled to your own experience. So am I. Okay. So those are kind of some of the numbers. Most of the time, we're probably going to be right in there. Now, let's go back to something just really quick. So trade number one, target, confirm and send. Now, any questions on that? Now, so Richard says, so the double of the ATR less than what percent of risk? So let's go back to this just real quick. So when we look at what is the ATR of target, now that ATR, that's actually using 14, okay, 14 days. What we're looking at is the dollar amount of risk divided by the ATR, okay? Dollar amount of risk divided by the ATR. And that we're looking for a multiple. We want to make sure that that is at least 2 times, and this is a multiple, okay? I'm just saying dollar amount risk divided by ATR. So that's, I wrote that there, multiple, minimum 2. So think about it like if you had a bad day, like it was down 4, it's probably not going to stomp your position out. If you're down 2 days, down 4 again, it's probably not going to stop your position out. But you go down more than that, greater chance of being stomped out. Okay, so that's what I mean by that. Now, let's also go back to just real quick. Remember how the stop works. It's saying if it goes to that price or less, sell the stock. So the con about the stop is we don't know, it's a trigger to sell. We do not know where it's going to fill. That's the bad part. Okay. Now, if you said, I don't like that, we'll consider, maybe learning a different product where it defines risk. There's cons about that one too, but this is not the only way to try to protect to the downside. Send the order. Now, let's also go back to just real quick. I'm going to go back to one of them. We said we're going to also bring up, I'm going to go back to WFC for just a second, okay? Now, WFC, when you look at some of these financials, Goldman Sachs, Morgan Stanley, Bank of America, you're seeing the Citi, right, which has not moved to the upside. We already brought up JP Morgan, Bank of New York Mellon. I mean, we just keep going on and on. What about PNC? Okay, blah, blah, blah. Okay, we get it. Now, what's so interesting is if you ask the regular person out there, what about the economy? This is where people have varying different opinions, right? They're talking about the economy versus the stock market. Usually the stock market is leading the economy, typically, okay? Now, I'm going to bring up this WFC. Why? Well, if we look at, let's say, the WFC, what you're now going to notice is we're kind of at this area. Now, its earnings were pretty strong. They actually had earnings of 2. They were expecting maybe what, $1.72? Okay, 72. Pretty good memory. $2, $1.72 was the estimate. Now, a lot of times, what some investors do, they might say, "Look, I want to wait until after the earnings." Okay, after. Now, what I'm going to do just real quick is let's go back to this for just a moment. Wonder if you wanted to just double check kind of some of the fundamentals of where is this company stack compared to, let's say, some of these others. I'm going to log into schwab.com. I'm just going to type in, let's say, WFC. Now, some people like to play the stocks that are hitting new highs. Other investors say, I don't like that. I like to find maybe something that might be trailing a little bit and maybe starting to move to the upside. Now, here we logged into schwab.com. I actually have WFC now. Now I'm going to scroll down. Now, if we take a look at this, we're going to look at some of this information about dividends. Dividends have actually stayed pretty steady, okay? The dividend yield is not massive. Now, some people don't mind that because they maybe have a stock that actually has more growth potential. It's nice to have a company that is not using all of its earnings per share, a high percentage of it, in terms of giving it back to the stockholder in the form of a dividend, okay? Now, if we also want to look at the earnings, there we actually see over the last 4 quarters, it was the highest. We go back to historical earnings, we can see that estimate versus actual. The forward PE is actually 11.95, okay, 11.95. Now remember, the price earnings, 13.17. The forward PE is normally lower because the PE and forward PE is still taking price on top, the numerator. The forward PE is usually looking at something that has a higher forecast of earnings per share. That is why that forward PE is actually tends to be lower, not that high. Okay, PEG is even in this case less than 1. Now, a lot of these financials don't necessarily trade at a high multiple anyway. Not a lot, not all. Now, when we look at the peer comparison, now we can actually see some comparison. We do not have to use the companies given. If I click on where it says show more, click on that. We can also change the companies. I'm going to do that. Bank of America, I'll use JP Morgan. We will keep Citi, and I'm also going to keep, I'll put in here, let's say, example given. Let's say we used a company like maybe a regional, Zion. Okay. So now if I actually scroll down, now we can see the comparison differences over the last 6 months. Wells Fargo really in that color right there, which by the way, is showing the lagger. Now, this is why some people, this has not been the stock that's had relative strength. I just want you to note that. Zion has actually been the horse. Okay, that's the one that's actually gone up the most. Okay, now, Zion's the regional bank here in Utah, among other places. Now, if we take a look at, let's say, this information like net profit margin, it's not actually the highest. Okay, it's the second lowest. Okay, in this case, JP Morgan net profit margin, the highest. Now, if we take a look at also some other information like return on equity, that is not the highest, it's JP Morgan. Interesting to note how some of the fundamentals kind of seems to be JP Morgan's leading the way. Earnings per share. And that's hard to compare because not all companies actually have the same number of shares. PE being a little bit more growth oriented for JP Morgan, 16, but still not 20 or higher. And if we scroll down and look at some of these numbers actually down below on annual growth, the annual growth as far as sales has not been that high. It hasn't. Over the last 1 year, it's only 1%. It's not even moving as much as the economy. Okay. And if you look at the forecast, now this is different. What's happened in the past, it's over. Okay. This is where we start saying, what's the forecast? 16%. What's the forecast over 3 to 5 years? 9%. So stronger than what it's been in the past. Maybe this is why it's been going up. Now, when we also look at, let's say, the payout percentage, if you like to look at dividends, they're all about 20-ish some percent. And if you look at the profitability, you're going to see the highest one is ding, 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 ding. Yours truly, JP Morgan. What a surprise. Now, let's actually come back to this. If we look at Wells Fargo, okay, this is kind of your classic maybe channel type trade. Now, we don't know if it's going to do this, okay? We speculate. It's not a 4-letter word. Now, what I'm going to do is I'm going to right-click on the chart, bring up the paper money count, JPM. We pull it up right here. Let's go back to the 1-year daily chart. Excuse me, WFC I meant. There it is. Right click on the chart, drop down to buy custom with OCO bracket. Now, sometimes what can happen is you get some leaders in the sector or industry group. That leadership goes up potentially, and it drags some of these other ones that might be lagging as well. Not always, okay? Now, what I'm going to do is, once we do that, we got 86.91 at the current price, and it's moving on us, so I'll unlock that. That price will now move as we talk. The target, what I'm going to do is set it about 95. We're probably going to anticipate that other investors might say 96. We're going to try to get out ahead a little bit of where those other investors sell. Sometimes investors might say, I'd rather get out a little too early with a greater chance of being targeted out than have a high target, miss the selling opportunity, and the price falls. So it's kind of they're being a little greedy, okay, but it's a balancing act. And the stop underneath this, we're going to use yesterday's low. Now, fast fire the numbers, okay? Now, if you take a look at this, when we talk about the current price, current price, $87. Support, move this over. What do we got? I think, what did we say, $83? 83. 81.34, 566, risk percent, 6.5. There we are. Okay. And when we look at the ATR, what do we got? We don't have it on that one. So let me just move this over. Where'd that ATR go? It's up back on that other one. Okay. The ATR is 212. Okay. Now that 212, let's type this in. Let's see what we got. It's not going to be too tight. 212, multiple 2.7. Okay. Now, when we pull this up, so I need the number 81.34. Okay. 81.34. Type that in right there. So trade number 2, Wells Fargo. Okay. Now, shares on this are going to go back to the capital amount. $7,500. 75. It's going to give us about 86 shares. Okay. Target and stop. Yeah. Now let's go back to what Sam is saying. Okay. Now let's see if Sam's right. Everyone want to see if Sam's right? Okay. Now, this is a company comparison. But what if you want to do an index comparison? Now, if we take a look at the index comparison, now this is what's kind of interesting here. It's going to take the company that we're first looking at, Wells Fargo, and it's going to compare it against the financial sector. Okay, so you're benchmarking, right? And then also what it does is it takes the S&P 500. So you got the stock, you got the financial sector, you got the S&P 500. But what if you said, no, I want to kind of look at something else? Well, we could kind of type in that something else that are kind of, these are defaults of what you can benchmark to as well. Okay. You could just say select an additional index. But these for many is, again, you're just benchmarking. Okay. Now, but if we actually took a look at this, and I'll go back to Exxon in just a second. When you look at, let's say the stock is trading below the financial sector PE, it's about a half of what the S&P 500 is. Okay. Now, if we went back to just real quick, let's send this. Remember how the stop works. If we go to that price or less, sell the shares of stock. Now, let's go back just real quick before we go to the energy for just a moment. Okay. So sell the stock if it goes to that price or lower. Okay. Send. Now, if we go back to this, I want to just take a quick look at where the market is. Now, what I'm going to do is I'm just going to kind of just look at this. We're still seeing Dow hold 181. Russell's, nothing changed there. Just going back to where the VIX is. VIX is still staying at 16. Not a lot of movement. SOX, not a whole lot of change. Still down about 3%. Communications, nothing changed since we talked about it. Actually pushing up a little bit more. We've got to ask the question, what in communication is pushing? Market watch, visualize, pull this up. There's communication, and it's your horses, Google, okay, and Meta. Those are the big names. Other things like Netflix, but those are not getting the big push there. Just seeing if we're missing anyone. I don't see anything we're really missing. It's really Meta. That's Meta and Google. Those are the pushes in communication. Now, we went back to this. Why can't everything be like this? You're seeing, now we'll do 2 of these. We're going to do them fast. Apple's still holding 12. Got to actually give it up for Amazon just a little bit. I mean, people slept a little bit on Amazon, but you know, Amazon kind of had that 248 slice through it this morning, and so far holding up pretty well. Got a little movement here to earnings. Now let's go back. We're going to do 2 names. We're going to do Exxon and we're going to do Google. Now, when you look at Exxon, again, now what some people might say, well, yeah, I'm not going to get in until we get above resistance. What I'm going to do is we're going to buy on the red candle. Oh, don't you dare. Well, so why do some people do that? Well, they're trying to get pancaked right near that support area. Okay, so if we went back to this and say 142.41, where's the support? Well, this kind of support that we actually had might have been right around 140 if we give a little bit more room. Let's say we'll put both of these 140. Well, 140. What did I say? 141. Bring it back up. 141. No, about 140. And then below that, maybe 137. So 140, 137. We did 140. Notice the risk percentage is abnormally low. Why? Well, because you're buying on the red candle or considering it. Okay. If we did, let's say 137, there's your classic maybe 5 to 6% on average. Okay. Now, so you know why someone does this, right? Some people are saying, look, I'm pretty confident it could bounce. Okay. I'm not always going to show this example, but I am today. Okay. Now, if we right click on the chart, we're going to go buy custom with OCO bracket. Now, if you don't mind, now I got to do bring it up right there. And what I'm going to do, we're going to right click on the chart, buy custom with OCO bracket. Now, what I'm going to show is that same $7,500 we're working with. Now, I'll take this back. Let's say we did a half position. You said, look, I want to leave a little capital left just in case we push above resistance and you want to add to it. Noted. Okay. Now, as I'm doing that, what I'm going to do is I'm going to right click on the chart, go down to where it says create an alert. When we create that alert, we're going to say, look, if you get above 146 and change, which is the resistance, consider adding to the position. Some investors might say, all right, the alert is not a buy stop. It's just an alert, okay? Now, if you take a look at that, it's sitting right there. We took a half position. We're going to try to show an example of buying on what we think is going to be a dip and a potential bounce setup. The horizontal, we really got about 154 and change. The stop, which we already made mention of, was 134.26. Okay, 134.26. There it is. Now, so what this is a half position, right? Second, add to the position. Well, you'd have to manually do it, right? Because this is an alert. Okay, right click on the chart. Wherever you right click, that's going to be where the price is that it's setting the alert. You define if you want it higher or lower. Okay, we said we want the mark, the stock price, this price, or higher. Noted. Confirm and send. Now we got third trade, Exxon, with the alert. Okay, there it is. Send the order. Now, stop is saying if we get to that price or less, sell, undefined as far as what that price is. Send it. There it is. Go back to Google just real quick, 90 seconds or less. If we take a look at Google, what do we got here? Now, remember we said before, now we have some shares of Google. It's just waffling around. Now, one of the bigger candles that we've actually seen, we talked about these big candles where some investors might see support. These large candles, we're going to add to the position. We're going to go buy custom. I'll go with a bracket as well. We can already see where that target is. I'm going to emulate that same number there, 401-ish, okay? The stop underneath, I'm going to move that stop a little tighter, 352.14. Now, you might be thinking, this is crazy. I would never do that over the earnings, okay? Every investor is different, of course, right? You might say, I'd never do it. Some might say, I'll take a half position. This is really probably doing, 13 shares on a stock price, $371 is $4,800. This is really a half position that we've had. If we do another one, this is like adding the remaining half. So we cannot do the full amount. We got to do something like $3,000-ish, and that's going to get us to a full position. Note that it's risky, okay? But you got to understand, no risk, no reward, okay? So there it is, and wrapping it up. Now, there is a survey in the chat. Click on it. Just 2 questions. Thank you ahead for filling that out ahead of time. Now, just real quick, so we did a couple trades here. Number 1 was Google. Number 2, if we went back and said, what else actually filled? We did Target, okay? We did the WFC, okay? So Google, ExxonMobil, Target, and XOM, okay? So 4. Now, the comment was, where do I find that Excel spreadsheet? Well, you can't find it anywhere because it's really kind of something we just make in class. I mean, as we were kind of talking, we wrote this stuff. Feel free to make your own, which it wouldn't take but 5 minutes or less to do that, okay? So in other words, if we took a blank page and just wrote current price, okay, support, stop, okay, dollar amount risk, ATR, uh, ATR multiplier, and really in that amount of time, you could just type in the numbers and just walk through, just like but what we have talked about here. Now I'm out of my time. But feel free to actually make a sheet that's helpful for you because you're probably going to be using it and evaluating it quite a bit. Now, just real quick, coming back, remember that coming up next is going to be the class on managing an option portfolio with Brent Morse. I want to say thanks to Ben Watson. Ben will be teaching later today on trading index options. Join him there as well. Thanks to all of you for answering those questions in chat and also asking those questions in chat. I tried to answer those back as we went through here today. And also, I will be teaching tomorrow on trading the trend, so join me there, and also the ETF class on Friday. Now, remember with what we discussed, it was done for example, illustrative purposes only. This has been the class on growth and value stocks. Thank you so much. Stay tuned for Brent Morse coming up next. Don't forget to give the thumbs up and follow us right on YouTube. And again, thanks so much. Stay tuned for Brent coming up next. Bye-bye.